Hey guys, welcome back to the channel. Let's talk inflation, profits, and what's happening with Stellar, XLM. So CPI numbers were just released, and they're a little bit of a mixed bag. The Consumer Price Index, CPI annual rate, came in at 2.7%, just slightly above the expected 2.6%. The monthly CPI was spot on at 0.3%. Now, when we move to core CPI, which strips out food and energy prices, arguably the most volatile components, the annual core CPI landed at 2.9% against an expected 3%, and the monthly figure matched forecasts at 0.2%. The information provided in this video blog is for educational and informational purposes only. It does not constitute financial, investment, or trading advice. The cryptocurrency market is highly volatile, and prices can change rapidly. Always do your own research before making any investment decisions. Now, why do we care? Because these figures reflect consumer purchasing trends and, more importantly, provide a snapshot of U.S. inflation. The CPI essentially tells us how much people are paying for everyday goods and services. If prices are rising but people are still buying, it can signal economic resilience. However, when these numbers exceed expectations, it raises alarms that inflation might not be as under control as the Fed would like. And sure enough, inflation has climbed for 2 consecutive months now, with January 2025 marking the start of this uptick. The Federal Reserve has noted this and suggested it will delay any interest rate cuts for the foreseeable future. And that, my friends, is one of the key reasons why the markets are looking pretty red today. Zooming in on the crypto space, we're seeing the impact ripple across the board. The entire crypto market is down about 1.8% over the last 24 hours. Bitcoin, which recently surged to nearly $123,000, has dropped back to around $117,000. That's still astronomically high, but it illustrates a significant pullback. So what's going on here? It's simple: profit taking. Investors are cashing out after a weekend rally, locking in gains while they still can. This latest move marks one of the biggest profit realization events for Bitcoin so far this year. According to data published just 8 hours ago, investors realized a whopping $3.5 billion in profits, and that number has likely risen since. Long-term holders were the biggest beneficiaries, accounting for roughly 56% of those profits. That's a serious chunk of capital getting pulled from the market. Now, you might be wondering, why are we diving into Bitcoin and macroeconomic trends when this video is supposed to be about Stellar XLM? Well, because these macro factors set the tone for the entire crypto market. Bitcoin moves first, and the rest of the market follows, and that includes XLM. There are 2 main reasons why XLM is down today. Inflation concerns are back in the spotlight. Investors are taking profits after a massive rally. Let's take a look at the XLM chart now. I'm going to blow it up a bit here on the screen for you. We saw Stellar XLM rocket from the 22-cent range all the way up into the 50s. That's a gain of 128% in just a couple of weeks. That's not a slow, steady climb. That's a rocket ship taking off without a parachute. And while those gains are exciting, markets don't move in a straight line forever. A correction is not just normal, it's healthy. So if you're seeing red today, it's not necessarily a bad sign. It might just mean the market is catching its breath. Now let's talk strategy. If you were trading this rally and not just holding for the long term, taking profits is key. Whether you're a day trader, a swing trader, or somewhere in between, you need to be locking in those wins. If you wait too long, you risk riding the wave all the way back down. And I get it. It's hard to sell when the chart looks like it might keep climbing, but a win is a win. Even a small profit is better than none. You'll never go broke taking profits. This brings me to a bigger point: emotional discipline. You've got to trade with a plan. Have your entry and exit points clearly defined. Stick to your strategy. One of the biggest mistakes traders make is letting emotions take the wheel. Don't do it. Let me give you an example. Whenever I go to the casino, and yes, I know it's not quite the same as trading, but the psychology is similar, I walk in with a set amount of cash and rules. I decide ahead of time what I'm going to spend, and I stick to it. If I say I'm only putting $50 into a slot machine, that's it. I walk away after that. I don't chase losses. I don't keep feeding money into a dead machine. Why? Because the house always wins in the long run. Trading isn't quite that stacked against you. You have tools, charts, and data to work with, but the principle of discipline still applies. If you don't define your limits, you'll get wrecked. That's why I always tell new traders, make your own rules. Decide in advance when you're going to take profits, and don't second guess yourself when the moment arrives. It might not be the perfect top, but that's okay. What matters is that you secured the bag. Because if you don't, and the market turns on you, you're going to feel a lot worse watching your gains evaporate than you would have taking a slightly smaller win. Avoid regret by making proactive decisions, not reactive ones. And if you want a little help with that decision-making process, let me show you what I use. This right here is my trading indicator on TradingView developed by CF Algo. It gives clear buy and sell signals based on sophisticated algorithmic analysis. You don't have to guess. You don't have to stare at the screen 24/7. When the indicator says it's time to buy or sell, you get an alert. Right now, it hasn't flashed a sell alert on XLM yet, even after that 128% move. That tells me the algo still sees upward potential. But if it does flash a sell signal, I'm ready. If you want to try it out, head over to cfalgo.com. Use my coupon code INTRO10 and get a hefty discount on the subscription. And just so you know, there's a 30-day money-back guarantee. So if it doesn't work for you, no problem. You get your money back, no questions asked. But honestly, for me, it's been an absolute game changer. It helps me trade smarter, not harder. Another thing I want to mention is the time frame I use. For longer-term trades, I rely heavily on the 4-hour chart. It offers a nice balance between noise and clarity. Each candle represents 4 hours of trading data, so you get more signal and less randomness. And my indicator thrives on that kind of data. It scans for patterns, momentum shifts, volume spikes, and more. Then it uses that information to project whether a trend is likely to continue or reverse. It's not magic, it's not foolproof, but it gives me a serious edge. So what's the takeaway from today's market action? Inflation is back on the radar. The Fed is staying cautious. Bitcoin is cooling off. And Stellar XLM, after an epic rally, is taking a much-needed breather. If you're holding XLM for the long haul, this kind of pullback shouldn't worry you. Volatility is part of the game. If anything, you could view it as a potential buying opportunity. Not financial advice, of course, but something to consider. If you're trading, make sure you're managing risk properly. Have a plan. Use tools that give you an edge. And most importantly, take profits. That's it for today's update, guys. Thanks for tuning in. Drop a like if this helped you, and let me know in the comments what you're doing with your XLM bags right now. Holding? Trading? Buying the dip? Until next time, stay safe, trade smart, and I'll see you in the next one.